Hello everyone and welcome to Good Morning Trading. I'm delighted to see you again. After a few weeks away for health reasons, you can see a bit of the results. I was away for 6 weeks. I've lost a little over 8 kilograms, so yes, I was a bit stuffed before. This t-shirt used to be tight and now I'm swimming in it, so that's rather positive. And above all, it's about my health. I'm feeling much better now, so I'm delighted to see you again and to be able to get back to the regular Good Morning Trading sessions. So we'll meet again tomorrow at the usual time, between 8 o'clock and 8:10, depending on YouTube's compression algorithm. I can't tell you exactly to the minute when it's going to release the video. Let's take a look straight away at what has happened over the past 6 weeks. So I left you here. And if you want to watch the penultimate Good Morning Trading video again, we were here and I told you I think this is the end of the decline and that we might see a rebound. And I said it exactly on the day when things turned around, and we've been rising non-stop for 6 weeks now. Careful, I'm coming back. That means we might be in for quite a strong downward wave. Now, it would be rather amusing if I managed to give you the low point, and we have. We've gone up from 23,000 points to almost 30,000 points, to put it simply. We've gained 7,000 points in a straight line. Well, it's extremely, extremely rare to see the market rise so much and so quickly. We've gained 25% after all, 25% in 6 weeks, just to give you an idea. And now it's starting to stall a little bit. Last Friday, we hit the highest level ever recorded. Well, that's very good. And now we're starting to drop a little, which would seem rather normal, really. So, if we're in for 4 weeks of decline, well, I'll be back in 4 weeks to tell you about the big rebound. Just joking, of course. But it was still quite amusing, so we've risen sharply. We're going to have to be extremely, extremely careful. Today, there's nothing special on the economic calendar for the day. At 2:30 p.m, we've got the New York Fed's Services Activity Index. That'll move things a little bit. At 4 p.m, we've got the Home Builders Confidence Index. We really couldn't care less. So today we've got Canada absent, the Canadian stock exchanges are closed for a public holiday, and there are no major US figures this afternoon. So the European Open will mainly focus on what happened in China, in Asia, at least overnight. And quite a lot has happened. The Chinese indices, the Chinese macroeconomic indicators are extremely disappointing. I'll give you the figures. For retail, we've seen a year-on-year increase of 0.2%, whereas the consensus was expecting around 2%. That's 10 times less. Chinese industrial production is slowing down, coming in at 4.1% year-on-year when it was expected at 5.9%. Fixed asset investment has seen a surprise contraction of minus 1.6%. Be careful, this could be the start of a recession, while the consensus was for plus 1.5%. Why am I telling you all this? China isn't the economic powerhouse of the world, that's the United States, but in any case, it's the factory, the world's factory. And here we can see that they're investing less, and industrial production is much lower than expected. Contrary to everything you may have heard about the meeting between Donald Trump and the president, I don't even know if he's president. What is the status of the Chinese leader? Leader, that's it. So with the Chinese leader, contrary to everything you may have heard recently, for the past few days, China has not been in a position of strength. That's why there hasn't been a huge power struggle here. They need each other. China's struggling and the global economy isn't doing well either. By the way, that's what explains why we've reached an all-time record high on the Nasdaq index. Just a little nod. But China isn't doing well. There's a contraction in retail sales, a contraction in industrial production, a contraction in investment. Well, they're suffering from the situation, with the Strait of Hormuz as well. Let me remind you that the Chinese were buying Iraqi oil at absolutely considerable discounts. under embargo, so they had cheap oil, and according to various statistics, this accounted for between 18 and 22% of their oil energy needs. Well, with the embargo, my lads, you'll have to pay the normal price. And so it costs more expensive then. So a loss of productivity for some in the Chinese industry, contraction, rising prices of Chinese products, perhaps competition with others, Vietnam or things like that. In any case, China's not doing well, that's very, very clear. It is not in a position of strength, unlike all those commentators who haven't spent 2 hours studying economics on a university bench. There you have it. It's absolutely disgraceful. Disgraceful what they can tell us. So be careful. That's why we might see a bit of a downward wave this morning, because things really aren't good at the moment. Chinese statistics at Osmophy, always Chinese statistics regarding the reliability of the figures. When they're very good, you can be a little doubtful. When they're bad, you can really start to worry a bit. So, there you are. We might be right at the top of our cycle. And so be careful. After a 25% rise, especially on the Nasdaq index, it could perhaps start to fall. Someone who is always optimistic about the stock market, I'm not pessimistic at all, but I'm just saying, well, after taking 25%, if we see a 5 or 6% pullback, that seems perfectly normal. What's interesting is that, technically speaking, things are still working just as well. Look, right in the middle of the night, it was 2 o'clock in the morning, we hit the resistance, a monthly one, and we started to bounce back. Exactly to the point, so the algorithms are there. So, for us, what will the strategy be then? We've got to carry on as we have been. It's a strategy that I actually teach in my school, based on a combination of technical analysis and psychological analysis of the markets, the analysis of market psychology. At 8:30, for my students in the Good Morning Trading Premium, I remind you. So there you go, interesting. Honestly, I can't tell you much more about the Nasdaq today, because we're going to wait and see what happens. And generally, you need the engine to get going, to start up, and that's what we want. However, we'll have a lot of information for Tuesday's session, because we'll have had the full reopening of the American indices. Never forget that on Monday morning, Europe reacts a little to the overall climate, which is rather negative. But they very quickly wait to see what the big brothers will decide, because it's them, in any case, who set the tone for the entire global market. But we can see that all the same. All the indices are in the red, even Bitcoin. Let's do a quick overview of all the indices. Then we've all opened the CAC 40, the one that's taken the biggest hit, the one that's at the lowest point compared to all the other indices, which, as usual, finds itself in a very familiar situation. Be careful, it's on the verge of breaking the overnight low, so that's rather, and we haven't seen everything yet. That's more of a bad sign. They're rather pessimistic. So go and have a look at last month's low. We're close to it, around 7,750. We could well reach that level. And as you can see, over the month, it's not looking very, very, very good. The CAC 40 hasn't managed to reach its highs, whereas the American indices have broken their all-time records. And now is falling much more quickly than the American indices. So there you have it. It's still the little black sheep among all the indices. As for the DAX, it's the same story. The DAX really didn't like it at all. The poor figures. Because the DAX is also quite industrially oriented. So, if China isn't doing well, the German industry is also likely not to do very well. So here we are, right at the opening of the European market. At the lowest point, at the lowest of the night, and at Friday's closing low. The Dow Jones also experienced a wave of decline, though bear in mind, it's a wave of decline after hitting its all-time high on Friday. So absolutely no concern for the American indices if they continue to fall. We have the monthly pivot point here, which is extremely interesting as we bounced right off it. On 30th April, that would wipe out 15 days, 15 or 16 days. Of 3 weeks of range. I could well see it finding support there, thank you. In any case, on its monthly pivot point in the event of a wave of decline, what's interesting is that it's at this spot where the monthly pivot point is. That could stop, that could halt the decline. On the other hand, it could also create a desire to go, to seek out that level, for the shorters then, friends, shorters, here is your target, and friends who are short, friends who are buyers. Well, we'll wait and see what happens if we reach it for the Nasdaq. I've already spoken to you about it a lot. I've spoken to you about the rebound on the monthly resistance during the night for all the indices. It's the one that's rising as quickly as possible and which could also risk falling, perhaps not more quickly than the others, but after having gained 25%, it would be, even though we have what we call, well, that's what old traders saying, we used to call that taking profits. Well, we haven't seen that for a few years now. But there you are, after a 25% rise, a bit of profit taking, the index dropping by 5% to 5% on an index that's almost at 30,000. That's quite a lot. We're talking about 2,500 points. But it wouldn't be at all scandalous. It would actually be rather healthy, allowing things to start off again. Why not to the upside? And to keep an eye on here then is last week's high, which really is a key area there. I've set a triple alert. If we reach that level, technically for scalping or day trading, there will probably be a nice little rebound to take on the S&P 500. We're in exactly the same scenario with the 7,250 level for a potential rebound that could happen. It could be interesting for gold then, as it just keeps falling. So quite simply, we might wonder when gold will stop dropping. Usually it's around August, when in India they start buying phenomenal quantities of gold. I've already explained this to you several times. So, we're in the month of May. Well, I'm not going to tell you that it's going to keep falling until August, but at least that's the general trend. Is there really a chance it'll keep falling in August? Why is gold no longer an asset that is particularly sought after? Just to remind you, we've reached higher and higher levels this year. At 5,1645, we're at 4,500, so it's still lost nearly 20% from its highest point, but it's still at historically interesting high values. But there you go, it's just that there are too many alternatives. They found better ways to make money, quickly and in their view, in a more secure way. That's it. The Nasdaq has been climbing in a straight line for 6 weeks. Non-stop. Absolutely non-stop. That's why I really want to warn you. Be careful about taking profits on the Nasdaq. It's rare to see a 25% gain without at least a bit of a breather, even for our friend Bitcoin. Well, listen, Bitcoin still quietly making its way. I left it around 75,000. Now it's at 76,000. Doesn't make much difference. And Leo, it's got some range, since we've been down to just below 70,000 at the lowest point. But right now, it's really in a range-bound zone, and of course. As for oil, well, I prefer American WTI. Why? Because that was my specialty at university. I worked for the Opal Thackett Group, which is part of the Total Group. You know, the big players who make loads of money. Super, they make loads of money. I was going to do my thesis with them. What's more, I'm very attached to WTI, and it's just above $100 at the moment. Yet the global economy seems to be coping with it perfectly well, which is extremely interesting. It's this plasticity, in fact, of the global markets. We realise that they're managing to absorb it now within our economic system. Barrels of oil at $100. That'd cause panic in the 1980s and 90s. Not all anymore, for several reasons. The first reason is that we're much less dependent on oil now. As you've seen, there are electric cars. We've significantly reduced our consumption and optimised the use of a litre of oil. Let me remind you that we used to have cars consuming 17 to 120 litres per 100 kilometres on those beautiful American cars in the 70s and 80s. And now, even with a car that's not particularly efficient, I think I'm getting 5 or 6 litres per 100 kilometres instead of 15 or 16. It's quite a difference. Well, at the same time, yes, I don't have a 1970 Ford Mustang, but it's not a vroom vroom, and it uses 3 times less fuel at any rate. And it arrives at its destination in a much safer way even, so we're much less dependent overall. That's why the old models that were brought back to us about the one at PE. If the bet was that if the price of a barrel of oil went over $100, we'd collapse, well, there you go. We've gone past $100 and we haven't collapsed at all. Yes, it's expensive at the pump. Well, yes, listen, it's expensive at the pump, that's all. People will buy, I don't know, one less DVD or go to a restaurant one less time. Consumption will drop a little and there won't be any difference. There you are, that's it. Let me remind you that if we are to believe the media, everyone is starving. From the 5th of the month onwards, well, from the 5th of the month onwards, all I see are people packed onto terraces and ordering ridiculously overpriced drinks. That's just how it is. On the other hand, it really has become overpriced. You order a coffee and it feels like you're buying a kilo of Stache. Well, it's not even good either. Stucky nowadays, to say nothing of eggs. Well, that's the trend. Eggs are the trend now. Right, that's enough of my nonsense. I'll see you tomorrow morning for good morning trading around 8 o'clock, I hope, and take care. Bye, everyone.